Okay, so first of all, we start with Velo, and I'm gonna look at the questions. Yeah, Andy said he comes a little bit later, so I probably answer his questions later when he's here. Probably makes the most sense. So Ben asked, at this point, you were talking about market psychology and how the monthly will be was very obvious, while the 3D breaker block sitting slightly higher was more hidden. Oh, my Discord's crashing. Yeah. Ah, sorry guys. Don't even know if you can still hear me. Okay, sorry guys, my Discord crashed somehow a little bit. Ah, okay. Funny. My Discord crashed, then I was in the audience myself, so I hope you can hear me now again and everything is all right. Gonna give you my window. So, gotta love the tech. And Andy's also here. Still no sound. Sounds good. Okay, okay. Yeah, sorry for the complications, guys. -5 checking in. Yeah, I got also like -3 German points for technical issues here, which couldn't be resolved before. Okay, so I was just reading out Ben's question. At this point, you were talking about market psychology and how the monthly order block was very obvious, while a 3D breaker block sitting slightly higher was more hidden. While many were waiting for price to react at the monthly block, the market grabbed the hidden 3D liquidity instead and then reversed. Is there a pattern that market makers use very often? It's not a specific pattern that market makers use very often, but the general idea of this concept is that when the majority sees a level or something and assumes something, it's most likely not going to happen. It gets front run, it gets like overshooted, people get liquidated trading this idea, and this is important. This is like a psychological concept, but also liquidity concept. If the majority expect something, and if something is very obvious, and this could also be a psychological level, right? A round number, like 100K on BTC. These are like the most obvious zones, and so price action develops around them, but not how the majority expects. And we can like simply go into the opposite side of the spectrum and trade alongside market makers. In that same chart, there was a bearish break of structure. Is there any way to know whether it's more likely for price to return into the range to grab hidden liquidity if the liquidity is available before continuing the downtrend? Or whether, like in the example, it simply was a manipulation move before more upside? Hard to know. If it's a swing failure pattern, I don't know if you heard that term already. A swing failure pattern is a liquidity grab, basically. You can check that by looking at order flow. You can check that by looking at sentiment, and we're gonna do that today. To see trapped traders, liquidated traders, and to define if this is most likely just a liquidity grab or if this most likely is a breakdown. And closes confirm then your thesis in this case. So I hope that made sense and answers your questions. Then we have, if not, please tell me. We're going to talk about this more if it doesn't make sense. Right, perfect. Good. Andy asks some questions. Questions regarding order flow liquidity. First, in the context of order flow, where do we see the fight heavy two-side trading that defines a consolidation order block And 1.1, how do we distinguish this fight from final capitulation? I don't know what E point G means, to be honest. We approach a higher time frame key level and we want to see late longs capitulate. So, first of all, the fight more or less always happens in every candle, not just in consolidations. But like a consolidation or an order block before an impulsive move is usually, and we have a perfect prime example on BTC today, which I can show you, is market makers filling their positions, waiting for people to position themselves on the wrong side of the trade, waiting for them to open the positions, and then absorbing this liquidity. We have a prime example on BTC. I can show that later, and then igniting the impulsive move because they have fuel for more upside, and they also loaded their bags. They had enough time to load their bags, enough liquidity to load their bags. My context for first question, I want to understand the pattern of consolidation, impulsive move, return to imbalance. How would one define capitulation, high time from key level versus lower time order flow analysis? Yeah, we're gonna look at this as well. Also, prime example, best I show you this on the chart. But you had also a question about specific data feeds, visualization, footprint delta, open interest, absolute necessary for effective order flow analysis, independent of chart trading software. We talk about this because I'm not sure how familiar most people are with order flow. Even though I talked about this before, I want to cover brief everything and what software and the difference. And with doing that, I can answer your first question then. And my context for a second question, you mentioned ExoChart website like Velo, Coinalyze have CVD, OI, funding rate indicators. Why use ExoCharts over those? We're gonna cover that today as well. And there is no reason you don't need ExoCharts. First of all, you don't need it. It has some advantages that the others don't, but it's not a necessity. I suppose the underlying principles of order flow are universally applicable across all asset classes. Do you use ExoChart for stocks as well? I did. You need to buy it separately, so it's more costly. I did, and it works differently than in crypto. The reason simply is that in crypto, it's like the most easy access to complex leverage like instruments in all markets. And so you have a huge amount of retail participants. And so it works kind of a little bit the opposite than it does on TradFi. So for example, a bullish CVD, or let's say a bullish divergence on CVD works. In crypto, if you have a bullish CVD, means the CVD line is going down and most likely price going up. Best I show this with examples. So I keep those questions for extra charts later, and I can show you everything. So this is Velo, and this is a software for free. They have a premium version, but you don't really need that. You can use pretty much everything that's important already for free. And for everybody that is completely new to order flow, simply use funding and open interest first. Wrap your head around this concept because it's very simple, very straightforward. You don't need to solve 1,000 different knots in your mind to understand that. And I explained briefly the basic concepts and what's important. So first thing you want to change here on open interest is the measurement from coins to dollars, because then this will look different and it's making way more sense to measure this in dollars, because otherwise you have fluctuations in price and so open interest looks a little bit odd. So what is this telling us? Funding rate is telling us like longs versus shorts, which means if this is green, we have more longs in the system, and if this is red, we have more shorts in the system. The beauty of Velo is, for example, this is a big disadvantage in ExoCharts. In Velo, you have aggregated funding or aggregated data in general. And aggregated data is a combination of, in this case, 1, 2, 3, 4, 5 exchanges, and even USD pairs here on 3 exchanges. This is a big advantage because it eliminates certain manipulation spikes and stuff like that, and giving you a better picture, a better overall picture. So for example, for my higher time frame analysis, I don't even open ExoCharts because ExoCharts, in my view, is for a very granular level to go below the 1 hour and really like watch the fight between buyers and sellers and really see single positions open and closing and getting targeted, while Velo gives you a very good overall higher time frame picture of what's going on within the market. And so I talked about this before, so I don't want to spend too much time, but if you look at when funding is negative, usually it's around a bottom. And this is a very consistent pattern, especially in an uptrend. So once we have negative funding, it does not mean we have like the perfect bottom, but it means it's around the bottom. This simply shows that more people get bearish, more people get short, and it's more likely, so there's more liquidity forming to the upside because market makers, and then this means price is more likely to go up because market makers have a target to take this liquidity above, in this case, those highs here, for example. Yeah, so funding rate, the difference between longs and shorts, and open interest, the amount of positions in general. So we talk about 21 billion in dollars now in risk in the market. This does not mean long, this does not mean short, this does only mean open positions. This is what this is telling us. And when this is going up, it just means people adding risk to the market. And if this is going down, it just means people removing risk from the market. And without funding rate, it's not so useful because we don't know if it's longs opening, shorts opening, longs closing, shorts closing. So we need to put this into context. And for that, we can simply use funding rate in crypto and say, okay, good. If open interest is going down, so for example, from this point on, we have a big spike in open interest. So very straightforward example of people getting aggressively long, right? So we have here an increase in open interest of like 6 billion, almost 7 billion, and prices ripping into all-time high. So many people going long here, and this whole move flushed them all. So what do we see here? We have an increase in open interest, so risk is entering the market, new positions. We have an increase in funding telling us this new risk are longs. And with this big liquidation candle here, we know with looking at funding, this is longs getting closed. I mean, looking at price action is very likely that this move with falling open interest is longs getting liquidated. It's pretty simple already, like by looking at PA and open interest, that is probably not short closing, but you have your confirmation with funding rate, and it's not always that clear, especially not on low time frames. We can also use here aggregated liquidations, and you set it also best to dollars. And it's simply telling us, it's a very nice overview. You see those three tools are very, very, very nice, simple overview to wrap your head around those basic concepts of buying and selling, people getting hunted, people getting liquidated. What is liquidity? It's a free software tool and you can simply use it on a day-to-day basis to like look at the move and look what it is made up. And you don't need to buy anything. You don't need to spend $200 for extra charge or whatever. You can simply use that and learn the basics. And if this is then making sense, you can think about like going further down, going more granular, because otherwise it will just be confusing and you usually don't need to spend that money right away. If you understand those concepts, if you can wrap your head around those, we can then dive into more granular stuff on Excel charts. You can also now ask some questions about this. And also there are many live streams where I covered this, also public live streams. If you want to understand this better, I don't want to go too deep into this now because I covered it several times. The questions are not that basic today. So if you have some questions now to Velo, ask them. And if everything is clear, we then dive into Excel charts and into more granular stuff. And you see how price again, so psychological level 100K, how price is moving around the 100K level. And if you then, for example, this is now for you, Ben, if you, for example, have a very obvious level, which is the 100K level, go and look on order flow, or look at PA. If you don't want to use order flow, you can also look simply at PA and define how price is trading around this key level now. How those people get front run, how those people get liquidated, how this reclaim made people bullish. all of those things. I mean, look at this big spike in funding here. This was all once we really broke above 100K here, or not even, it's just a big wick. People were so uber bullish. Look at those spikes. Look at open interest going up, shorts getting liquidated, people going aggressively long into the top. This is something you will see over and over and over. How to use it for trading as a +1 confluence, main confluence, or for general analysis. Depending on context, so if it's a higher time frame idea, it adds confluence to this idea. Sometimes on scalp ideas, I only trade based off this order flow, but not very often because I don't scalp a lot since a few months. But I did a lot, and I sometimes then only traded order flow ideas, which I can show you on exocharts. But in this case, so looking at this at higher time frame, it adds more or less confluence to my main bias. And I can then define, for example, look at, we are now long crypto, or many of us, I don't know. And we're hitting demand here on BTC, and we know altcoins hit their levels and this and that. And that funding rate went negative here was simply confluence to me. And then I would want to know, I can also use Velo for defining, okay, this negative funding rate, is it fresh shorts opening or is it only longs getting liquidated? For example, all the way here, funding rate went negative, but it's only on negative open interest. So many longs got liquidated here. You can also see this and this big spike here. But here we have an increase in open interest and funding rate went negative. So this was shorts opening. And when shorts open freshly here, where do they put their stop loss? They put it here. Give me the brush. They put it above here, maybe even above here. And then the next impulsive move takes this liquidity. We have those green spikes, you see? Those green spikes, shorts getting liquidated. Then back down, longs getting liquidated again. And this is how you can use those tools to define, to go more granular, to define where liquidity is forming and why. And so then you will know why price is doing what it does. Why do we take those highs? Why do we go back down? All of those things. And especially if you, for example, let's take this looks like a very friendly face, by the way. If we remove this again and we think about the higher time frame level here, and one more thing, those order flow tools on altcoins, they sometimes are horrible. Simply because altcoins are so manipulated, oftentimes probably most of the supply is controlled by a few entities. And so order flow data often makes no sense. And the more volume your asset has, so I use, for example, this kind of analysis mainly on Ether and BTC, and they are deciding what the rest of the market is doing anyway in general. So there's no reason to let myself getting manipulated by all of those crap coins if I want to trade them at all. So I found my bias still on BTC, even though I'm, for example, long AVAX. And what I see here, funding getting negative, negative again. Here, or after every single drop, funding gets negative. This does not imply we have fresh shorts opening every single time, but this implies that there is a lot of shorts in general in the market. Because if you look at the average of funding, it's usually very positive. And if funding starts doing this, there's fresh liquidity forming above those highs and above every single high, basically. So people going to put their stop loss here and somewhere here, and the fresh ones probably here and here and here. And the next move should be maybe do something like this, FOMC fuckery, whatever, and then ripping up. You will see a lot of shorts getting liquidated with every single high that's been taken. So if we, for example, take 100K, sentiment will flip aggressively, and you can use order flow to confirm if it's really changing aggressively. And if it's not, for example, we had this earlier in the cycle, but probably not on the 1 hour. We had this earlier in the cycle. You see here, price starts going up. After being negative, price starts going up. And up here, after taking the first rounds of liquidity, funding went negative again. So even if I say, okay, this is supply, I targeted this maybe as the middle of the range or something, or the 618, in this case, the 618. And I say, okay, good, this was my trade. I was long here and I TP'd here. But then seeing funding rate getting negative again, it's like, okay, this adds confluence that we probably go for range highs. Does not mean we make new all-time highs or something, but people getting fresh shorts getting in and building more liquidity above here and above this local high. And so then in the next move, and you see again, big shorts getting liquidated, also like here on the first move. So you can then define if a move has more steam left. It's not that you have 100% certainty, but for example, if we do this and we go here with my little penis up to 100K, and then we take 100K and people get very, 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 very bearish again, so funding turns negative again, it's more likely that we probably, even go higher from here and take even those highs. So this could be a similar setup, but if people are getting very bullish again, so we have a spike in front, oh no, it gets a bit messy. Let me remove a little bit of this crap. So if people start getting bullish here, so we have open interest maybe increasing, we have fresh longs coming in, fresh liquidity, fresh buyers, after taking maybe this high, price starts consolidating here, and it's not that funding still is negative, but rather going up, maybe not like this, but even a slight increase, no more red, fresh liquidity coming in here, fresh risk enters the market. We should expect that this level is probably rejecting us, and we can add confidence to that. And then it's not like here, but it could also be like here. So my main bias is not this, because we are later in the cycle, and I think this is going to be last exit pump here to attract liquidity in the top range. But who knows? And if this is like, if order flow is telling me, whoa, many fresh shorts coming in and these highs are still unprotected, I'm probably going to flip my bias and we maybe take this, maybe go even higher, or we take this and reject then. This is the next key level then. And we can again look at order flow. What does order flow say? Are we getting more and more bullish, or are still many shorts coming in? And this is how you can use Velo. As said, free software, pretty simple, pretty straightforward. And if you use all of this on a daily basis or on a weekly basis, all of this will start to make sense. The psychological side, the liquidity side, why do we trade those levels? Why do those levels react? This is all based on order flow. It's all based on buying and selling. Not that you need that, but once you got all of this in your head, you can so easily adapt to a new situation and flip your bias based on what the market is telling you instead of what you hope or what you predict. Yeah, that way it can be a very powerful tool. And as said, Velo is definitely enough for that and for being more and more granular. Can you please add the open interest for this example? What we want to see with it? I think I said that. So funding is telling us, so let me remove a little bit more. So if we go up here, so I'd say the 105, 100, whatever level here is going to be very important here, this whole area. It's around the 0.5 of the range. It's the 100K key level. It's going to be the first real test, higher time frame test. You see the 0.5, I'm just going to remove this because it's so cluttery. So this is going to be the first important test. This supply area, you can refine it, whatever. We have the 0.5 there. So if price is now going up there over the next days, maybe, where's my brush? Here we go. And we go into this level and we, for example, see open interest going up and funding going up. We know this is many fresh longs are coming in. This is not very bullish for the market. Why? Because if longs are coming up here and opening, where do they gonna put their stop loss? Probably below this structure, probably below here, below here, below here. So if longs are opening here, liquidity is forming below those lows. So market makers have an interest in taking this. If, for example, this little thing here is going down, so we have still around negative funding, so it's not going to be, usually not going to be a big red spike on something like that, but it's around negative, and this is going up, but this is more or less going down from here, and you probably need to get more granular then for that, and we can cover it once we hit the level, obviously. Then we say, okay, there's shorts opening into this, and if shorts open, where do they gonna put their stop loss? And we could still, like, even with the short opening, we could still fill this imbalance, for example, take a level here, and then do this, because the short liquidity would be here and here, maybe even above the all-time high, but we take it level by level. So we would probably take this high, then we would take this high. And then the question is again, have we taken enough liquidity? What is like the main interest, the main plan? Are we going to rip higher? I'd say no, but who knows? Or are we then done? We have taken the liquidity and then take out all those longs, because even though shorts may be open here, throughout this, longs open anyway, and they're gonna put their stop below here. And in the end, if we fall down, like the same story here. So we went up and up and up. And even though people were bearish here and shorts were opening and stopped and opening and stopped, there was always some longs opening, and they put their stop here and here and here. And look on the way down, these stops taken, little consolidation, more longs opening. We go here, we bounce from the 100k key level, which is also aligning with this low where people have their stops, as said, on the way up most likely, taken, on the way down, this low taken, now we are above this. And if we, for example, do something like this here, then so much liquidity has been formed here because all those people going long here on a higher time frame, so all those people going long have their stops either very close, or if they go long on a higher time frame, the liquidity is going to be here. And so this is then the next key area of interest. If we cannot reclaim and take like up higher from here, then most liquidity is probably forming below here. And then you add some macro analysis and all this kind of stuff to make it make sense more. But only with this you see how predictable it becomes if you understand the whole market mechanics. And you see, by this is what I was telling you, on the way up we formed this liquidity below those lows, and you just need to look at the liquidations here. And every time we did take those lows, we had a big liquidation spike here, and we talk about 300 million, 200 million. I mean, this was completely nuts, 1.5 billion, by simply taking those highs. Do you see how bullish people were up here? By simply doing this, not even taking this and this low, we already liquidated 1.5 billion. This is how bad people trade actually. Okay, it's now a real messy chart, but I think it made sense so far, at least I hope. And this can be applied, what I'm telling you here on high time frame, this can be applied on every single time frame. We're gonna do that with EXO because I have a very, very good example now today on the 1 hour and 15 minutes, because I was talking about this with a mentee before. Come on, why I am deleting it, because it saves it usually. Yeah, and if you, for example, have saved your template, I don't know, because they have updated it, I don't know if it still works. Because I had my template, my colors and everything, usually you can save it here. And if you, yeah, okay. Probably they added this, they changed this again. So there was a time when I could save this without premium, so probably you need to make an account or something now. But other than that, you can simply pull up those indicators here: aggregate funding, aggregated liquidations, open interest. So basically, funding rate negative is a good sign for long, since people are trying to short the market and liquidity is created above PA. Yes, funding rate is negative does not imply new shorts, but it does imply there's more shorts than longs if it's red. And those shorts maybe not completely fresh, but they still have opened somewhere, and they probably have their stop somewhere above those highs. So if you see positive funding rate, means longs are created, so liquidity will be above PA, and therefore market makers will get that liquidity. Positive funding rate simply means we have more longs than shorts, and you need to look at open interest here increasing, and funding increasing means longs are opening. By only looking at funding, you know, okay, there are many longs, but are they fresh? Where's the liquidity? You can use open interest for that, and by looking at PA and comparing it. And if we look at funding, funding is green most of the time, but those big and crazy spikes, these are very rare, and once those occur, you want to get the fuck out if you're long and you want to look for shorts. And but also here, like, this is not nowhere near close than this. We have only those very slight spikes here, but still, open interest increases, spike, open interest increases, spike, open interest increases, spike. Look what to happen to price every time right after. It works still if you're logged in. Normal account works. Ah, okay, thanks, good to know. Probably need to log myself in. And then probably all my templates are back, I guess. Okay, this to Velo. I wrote it like this. Is it correct? If funding stays positive, then it's more likely we will see a reversal to scoop up the liquidity sitting below the range lows. If funding turns negative around mid-range, then it's more likely we'll squeeze those shorts at the least push up towards the high. In this case, like in this example we made, it's true. It's right. And in general, like if you have, you always look at market structure first. If you have at a key high, you have funding rate increasing and open interest increasing, you know longs are opening into this key high, so a breakout is not that likely. If you have in a key resistance or a key high, so we like the supply we marked out, if you have negative funding and even like open interest increasing and negative funding, a breakout becomes likely. This level failing becomes more likely. Not immediately, maybe. We maybe reject a little bit, simply to attract more liquidity, more shorts, and then we rip it. But in general, yes. Okay, I'm gonna load EXO. Okay. So EXO is a little more complex, and EXO is also expensive. So and it's not necessary. So it's not that expensive, but especially if you're still not like consistently profitable, it's always like how much do you want to invest into trading. And as said, I bought it like very early in my trading career because I found order flow very interesting. It's not necessary. It can help a lot to make things more understandable on a granular level. And to be honest, for me, it was a great investment because I learned so much by using it. I would have not learned so much by simply using, for example, a Velo chart. But it's not necessary. With the things I've shown you, Velo can be so powerful already, and exocharts can also just add layers of complexity that are not necessary in the early stages. So oftentimes, more complexity leads not to better outcomes. Um, Victoria asked, can Velo be used for scalping mid time frame? We can cover that still real quick. And yeah, it can. Like I shown you here on the 1 hour, you need to put everything into context. And the thing I'm showing you with delta, so we're going to talk about delta and open interest now. Delta is a little bit similar to funding, but delta is way more precise. So if you want to scalp, it's better to have like delta. And EXO is really nice because it has such a nice and great overview of delta and open interest together. But basically, funding rate and delta is not so different. And you simply look at, for example, open interest increase, funding rate decrease. And on Velo charts, we look at open interest increase and delta increase. You see? And this is pretty much the same as funding, but you then see really the real number. Like you see how much liquidity and how big these orders really are. And this is way more precise than looking at funding, because funding rate is like pretty much a percentage like measurement between longs and shorts and the comparison. So it's way less precise, but it's definitely possible. Just don't get confused. And the more granular you get, the more difficult it gets to read it properly. And also don't fall for the illusion of safety that these programs can provide, because it's still probabilities, right? So the the best analysis can still fail, and those never forget that. Even though it all sounds so smart and so logical, it's oftentimes still probabilities, and it can still fail. And it's very hard to really detect whales' intentions, even though you see the numbers. But I have a prime example for this today, if I can load the right ticker. Let's pull up a new one. Yeah, ExoCharts has its problems, to be honest. So for the price they ask, it's horrible programmed, to be honest, really. And this is something you need to keep in mind. I mean, the new version, since the 3 point something version is released, it's good. It's way better. So the first version was so horrible. They still call it a beta. I need to load the template first. And it's a little bit more difficult to use than Velo. So if you're not so familiar with technical stuff or computers and stuff, it's way easier to use Velo. And also, if you want to have my template, because it will look like I loaded it right now and it will look like that from the beginning, and you need to adjust like to get the real data and to get all of those windows, you can have my template if you wish. I can like save that template and send it to you. And then you get it basically my colors and all those windows and footprint bar and that kind of stuff. Because there's a lot of things to set up in the beginning, and such a template can save a lot of time and nerves. So we're now at Binance and we are looking now at BTC traded. So I changed that to a synthetic value because we want to look at volume versus price. So we X more or less the traded BTC with price, and then we have a dollar value because a dollar value is always more telling than the value in BTC in this case. So now this is like one of the bigger disadvantages of Exo. You need to set it up properly because otherwise the data might make no sense. We have, maybe adding a 0 here is already enough. No. Now I'm changing the delta cluster to make it make sense. It's okay. Good. So what are we looking here? So first of all, this is price and this is CVD. So this is like something that's immediately jumping into my eye. So you can use CVD to define are people buying or selling. And you don't need to look at anything but price and CVD to define this. There's also a CVD line on Velo, but if I want to see CVD, I usually pull up Exo simply because I have it. But you can use it on Velo as well. And what happens here is CVD, cumulative volume delta, is telling us there is selling going on. So CVD is showing the aggressive side of the market. So there is aggressive market selling if this line is going down. If this line is going up, there's aggressive market buying. If there is aggressive market buying, if you understand the order book, market buying should lead to higher prices because somebody's market buying, price should rise. If somebody's market selling, price should go down. In theory. If this is not happening, like here, so in this case, if we compare from this point on, so the CVD line leaves price here, it's going down while price is pretty much, oh my God, come on. While price is pretty much flat. And this is already our first thing we can look at here. It's a bullish CVD because there's aggressive market selling, yet price fails to go down. This simply means there is an aggressive limit buyer here. And the limit buyer is not going to be like visible in the CVD line. He's absorbing price against those aggressive sellers. And if you understand the market mechanics, you know that market makers need sellers to fill their positions. And this is what they probably do right now here. This does not mean we need to like immediately explode to 100K from here, but this means somebody with buying power, somebody with control over price is right now holding a price against those aggressive sellers. This could mean we have our first indication of what whales and big traders want to do here. They want to absorb those people, create some liquidity above those highs to then push price higher with their new form positions. This is what this is telling me here right away. We have another example where this played out quite good. So we have price going sideways here. Oops. Price going sideways here. And the CVD line from this point on made a lower low. So we have pretty much aggressive selling, but price is stable. What is this telling us? Somebody is supporting price here. Somebody in this consolidation maybe wants people to sell, to then do this, because he needs to fill his positions. He needs to create liquidity above those highs to make the move cheaper for him. And then he can ignite the real move. And this is what, for example, first question of you, Andy, this is what a consolidation is made of. A consolidation is a range that is going on for so long until the whale has filled this, or the institution has filled its position, created liquidity in the direction they want to have, and then igniting the real move, which is then an impulsive move, taking this liquidity and creating a new range. In this case, it's a little bit down. And we can look at why. So, and I can do this whole analysis by only looking at CVD and price, because I understand what this means and the market mechanics. So if we now look at this candle, we are at the 15-minute. If we look at this candle here, there's aggressive selling going on, right? This is the candle that pretty much nuked CVD lower here. The point of control of this candle is up here. So the most volume of this candle was traded up here. And if I now add more to my analysis than that, for example, here we have open interest. Make this a little bigger now for visual purposes. We have open interest increasing here, a few hundred million. And now we talk about Binance only. This is the biggest disadvantage. We now look only at Binance. And I have Binance and Bybit. I don't really add more. We can look at Bitget and blah, but more complexity does not lead to better results usually. So Binance here, big volume at the top of this candle, aggressive increase in open interest, and down here our newest value, and this is what I said is basically also a little bit like funding. This is delta, and delta is the combination between buyers and sellers. It's also what is the CVD line is showing us. The CVD line is going down, and we can also see that here because minus 80 million in this case, minus 80 million with increase in open interest means short opening. So we have sellers, aggressive sellers, market sellers going short here. Not longs that sell, it's people shorting. What does shorting imply? Shorting implies they have to stop at some point somewhere. Might be here, might be here, might be here. Anyway, I'm not the only one, we are not the only one looking at this data, and probably even not the ones with the best data streams. And somebody is waiting for exactly this. And I know this by looking at the move that followed right after. The art is to spot this before. The art is not like, obviously looking back, learning and all that kind of stuff, and to show you guys that. But if you want to trade with such information, you obviously need to spot this right away. And this is what I mean by you can also trade simply by looking at order flow. So the thing is, if you want to trade only with this, you need to be really in sync with the market. So I talk about like doing nothing else, 10 hours a day, trading, staring at this kind of stuff until you like only see candles when you go to bed. And then you suddenly see things. Sounds crazy, and it is. And by seeing things, I mean you see the intentions of those moving price. Because look at this. This guy, let's assume it's just one guy. Usually it's a little more complex, but let's assume for simplicity, this is one guy, and it may be even one guy, a big one here going short, and a few others. And he's selling like 80 million, aggressive market selling, 80 million. Look at all of those other like deltas. Look at this. And it's for 18 million sell, price is not really moving down. Not at all. I mean, pretty much nothing. So this means absorption. And CVD was telling us this already, right? Price is going stable sideways, CVD is going down. This was showing us already big absorption here at the lows. And this 80 million long got absorbed. So this could be a first indication that, okay, somebody with real buying power, not just 80 million, somebody with real control over price is absorbing this guy, maybe with a higher interest in mind. And now looking at those next candles, it became kind of, I don't want to say obvious, but this guy got like obliterated. And the question now is his liquidity gone or not? And for this, we need to look at the following candles. And in this case, we have, we want to see shorts closing, right? So we have a big short open, and somebody at some point this guy needs to liquidate his positions, either getting stopped or closing it or whatever, or adding margin if he like want to get wrecked completely. So also possible. But looking at the next candles, for example, here we have a little spike in open interest. You see this little wick, and we have positive delta. And so this candle is red and the delta is positive, meaning we have risk removed from the market with positive delta, which is then shorts closing. And this is what we now look for. We have 80 million, and I know because I looked at this for longer today as well. We have here also same thing, 80 million in shorts. Some of it got covered here, so 40 million are gone. So I always calculate this in my head. So let's say 80 million minus 40 here throughout this range. I don't want to make it too complicated. If you look at this live, you have lots more data, but let's take those two. So we have 80 million. Then here, 40 million closed of this short. This is just longs closing here, or getting liquidated looking at this wick. And so here, 40 million in shorts closing. So we have still 40 million of the $40 million somewhere above those highs. And again, here we added another 80 million. So we then have 120 million in short liquidity somewhere above those highs. Then we have like, let's assume this is like 20 million because this wick is not, so this candle is not that telling. I could go granular, but then it loads so long. So let's say 20 million, we are back at 100 million, still in short liquidity there somewhere. So the next candles, big impulsive move, the next candles, increase in open interest. Remember, this move needs to come from somewhere. Somebody filled their bags and then he market orders because obviously he needs to create a new range. He needs to target those shorts or something. So it pushes price higher aggressively. So we talk about 200 million or more. And then with almost at the top of this move, another like increase in open interest and negative delta, minus 60 million, adding to those 100 million. So we have 160 million now in short liquidity, somewhere above those highs. Somebody got big balls here, as it seems. And if you see this does not add confidence to your own short. And right after, price pushed aggressively higher, another 200 million positive. And then here we have negative open interest, 110 million. So from those 160 million we were talking about, 110 million got blown out with this wick here. Look, 103 million up here with this wick. And if you then zoom out, he was having these big shorts were having their stop above this high, exactly somewhere above this high. This market maker knew this. He was taking this liquidity. And so the whole idea of, being long here as long as the liquidity is taken is gone, because this liquidity was mainly taken. I mean, still remaining 50 million, but you don't know. The market maker could also go short here, right? So 100 million of 160 million, it's more than 50%, even more than 60% of the liquidity of those shorts down here were blown out. And so you should assume this move is pretty much done here for now. Does not mean forever. We're very granular here. We look at the 50 minutes. So don't get over biased by looking at this stuff. We have then open interest going down, minus 122 million in longs closing. This is very likely after, like, you see somebody aggressively went long, and this is also not retail, maybe a little bit, but not really. Most of it is probably this guy targeting up here, those 100 million in shorts. He liquidates this guy, and then he sells his own long. And retail getting bullish here, retail buying, makes this guy offloading his position very easily, because look at this, minus 120 million, and price is barely moving. So somebody either absorbing here, or more likely after a 5% move to the upside and altcoins pumping and blah, retail gets bullish and buys. And he can use those buyers to offload parts of his position. And then all of these imbalances here, they are the next target. And price is simply grinding lower to those imbalances. And the question now is, how far do we go down? Because somewhere built big positions here. Most likely we built higher highs and higher lows ever since like the biggest low came in. And so the market maker might have an interest to push price even higher, but he lets price come back, and you see open interest decreases. And also we have the negative divergence here. So he could also start again to refill his bags here, create liquidity above those highs. And for that, we could then now go in here and look for signs. We have, for example, new shorts opening here, some longs getting liquidated. Nothing major here, not as telling us back down there. We have here those shorts getting blown out, so they were going long here, short here. With this spike, many shorts got already blown away again. And now we have this bullish divergence, mainly made out of long selling. We have now some longs coming in. Yeah, and then now it's FOMC soon, so FOMC fuckery is to be expected. Yeah, but technically on Binance, somebody's absorbing here. But it's not that telling. Actually, minus 40. Yeah, besides this long liquidation spike, not really telling, low volatility, no real bias from my side on the lower time frame. My higher time frame bias is still up. So I would now, my higher time frame bias is up because we make higher highs and higher lows. And so I look for signs to prove my idea or to disprove. So if I look at those highs and I see major longs opening at those highs, so for example, this is a major long opening, 200 million, but also somebody offloaded aggressively here already. And ever since then, I have no real signs that somebody is aggressively going long, also not aggressively going short. So the main bias remains. It's still up until proven otherwise. Market structure above everything else. CVD line trends to be leading the price movement. Is that often correct for swings up? No, this maybe seems like that, but actually it's, if you look at the candle and price itself, it's usually at the same time, because as said, for example, here price is going up and CVD is going up because the price movement needs to come from somewhere. Somebody needs to move price higher, and CVD is just showing those aggressive buys that are moving price higher. You want to look at CVD differently. Especially this is now for crypto and stocks and everything. This is what I wanted to say in the beginning. It works the opposite way. But here you have aggressive selling into this accumulation. So similar to here, actually, into this ranging here. You have price going up, you have CVD going down, and this is whales absorbing those aggressive sellers, because the aggressive side of the market is usually retail or unexperienced traders, because if you trade with real size, if you have price moving power, you simply can't execute your orders on market orders. So you need limit orders, and these guys had limit orders below those lows, and they absorbed all of the selling here and waited for a big short to come in to then squeeze him. If that whale or market maker hunted those shorts and then closed its position, price doesn't have any more motives to target the lows of the range. So if market makers hunted those shorts and then closed its position, price doesn't have any more motive to target the lows of the range. There's always a motive to target the lows. There's always a motive to target the highs. So in this case, we have like probably overall 400 million in longs opening. We know that the 200 million sell here got absorbed. So it did not move price lower a lot. And also with this move, a lot of liquidities are forming below these lows. But it's not so wise to expect something against market structure. So market structure is telling us price is going up right now. We have to make higher highs and higher lows. And while there is liquidity forming below here, it's not so wise to try to predict that this is going to be taken. I would rather align with myself with market structure, especially with scalping. Don't fight the trend with scalping, and then look for signs that prove or disprove the continuation of the trend. And as I said, there's nothing so telling around those lows besides the aggressive absorption here. So we have this aggressive CVD drop and this stable price movement here, actually like very stable, similar to here. And if this is continuing, and then we see shorts opening into this, we should expect a similar move than yesterday, basically. Right now, there's not so much going on, and it's probably needs some more time, some more FOMC fuckery to create the necessary liquidity to create the next move. But also, we could also just simply drop down and take this low. It should just be treated as confluence. Use market structure, use everything you know, and apply this on top. Don't use this as your main bias. Do you think you would come to the same conclusion for the CVD example using Velo? We can simply compare, because I know EXO seems to have the more precise data flow. So we can close some stuff. Anymore. And for this case, you need aggregated volume. You change it to dollars. You change it to cumulative delta. Then you have it on an own pane, and then you add it on top onto the existing pane, and then you zoom a little more in, and go also for the 15 minutes. You need to consider that now we look at aggregated data of 15 of 5 different exchanges, so it won't look exactly the same, and it's not. I don't like to use it as much, to be honest, but it's pretty much showing the same picture. So you need to be good in comparing those. You need to have an eye for comparing price and CVD. And it's technically a bullish divergence, but it's not that clear. It doesn't look as nice. And it's also, yeah, I don't like how it moves around and stuff, but pretty much you can come up with the same conclusions overall. And also here, this is also technically a bullish divergence because it's going down further, but also not that clean. And this is the thing. On a granular level, something aggregated with 5 different exchanges, and you need to consider all the manipulation that's going on, especially on exchanges like Hyperliquid, I guess. But if you then remove all of the other data flows here, it's pretty much showing the same picture like on EXO charts. You see here on Binance now how aggressive this divergence is, and now even here how aggressive this is. So it probably works. Could probably also use this, to be honest. But as said, I don't like how it moves around. But this is personal preference. Probably if you start learning with that and it's free, and you only use this from the beginning, it's probably ExoChart will annoy you way more because the whole program itself is so more complicated. And the only big nice thing I like here on the CVD analysis is how it like moves to price. You see, it's not that weird. But this is pretty much the only user-friendly advantage of ExoCharts. Yeah, Aristo, have a great day. It's recorded as always. So, and also there are a lot more autoflow recordings as well already. And if you guys are interested in that, we can talk about this every single week. I don't care. It's your sessions basically. We talk about what's helpful for you. Yeah, and I can also talk about this every week. How would you backtest it? Not in the sense to backtest like trades, to rebuild order flow, for example, counting the delta, seeing when a move is done, and so on. How long is the rhetoric PA of data at EXO? Good question. Best thing, so how I did it was to look at PA live. So this is what I was telling you last week. Instead of spending hours watching TV, I spent hours watching candles and fighting between buyers and sellers, which is a little bit nuts, but this is how I learned it. So I did not look back too much. And obviously you don't have like to watch every day, all day. For example, in this kind of region, it's probably not that interesting. So you zoom in, you collect some data within here, like the thing we did basically, because I looked in the morning and we were like here somewhere, and now I just looked and compared what happened since then. But you want to look at key inflection points. So you want to look at, for example, at those highs, at those lows. How is this developing? And you can look back. And what I want to say is you don't need to backtest like the 2001 all-time highs for that, but do some research of like highs and lows that formed like within the last few weeks, or like now, for example. Why is this move developing? Look at this. This is not your everyday move. We had a 5% move. There are billions flowing in this market on such days. Why and how? And how could we prepare for this? You can do this every day when there is volatility. You backtest more or less by looking what happened before, what happened after, what is happening now. And if you do that every single day, you have your backtesting. And because it's asset X is usually used for lower time frame, more granular stuff, um, you will have a lot of stuff to look at. So you can, technically you can go back for 365 days. The thing is, at some point, X is not able to load it anymore. So I don't know what the limit is for 15-minute, but I know for 5-minute and stuff, you can't even like load 182 days. And it also takes some time. So if I click this now, it will take some time. So for example, only for the sake of showing it, let's go for the 31 day. You load it up. And as said, I also loaded up 365 days, but it takes time then. And it loads this every time you load a new chart, a new ticker then. Do you have any examples where you entered the trade based on order flow? I think in the study area, there are some execution examples. And also when I talk about volume spread analysis, it's pretty much order flow. So when I talk about a volume spread, when I talk about those candles, those wicks, I don't see just a wick, I see this basically. And I don't need to look at this all the time to understand what this candle means, because I've seen it many times before. So for example, here we have this spike here. This was like the liquidation hunt for taking out these shorts, the ones that formed here. Obviously, by looking at PA, I can't really say, I can't really know that there's like 30 million in shorts opening here looking at this candle. So this is something you only can see with order flow. But by looking at this candle, I saw that somebody took liquidity by filling this FVG and taking out those highs, which probably this guy used for protection of his short. And same story here. We talked about this candle here before. Look at this big wick. It's somebody investing in this last push higher to liquidate like the last amount of shorts here with this here, and then immediately lets price collapse because he uses those shorts to get out and even more. And so this wick is getting printed because he's not willing to keep price up here, because this means if he's pushing price up here, so if somebody's market ordering with size, he also risks getting dumped on, right? And so he immediately needs to close this position again after he reached his target, and that's why these wicks are printed. So this wick is still just only to take the liquidity and then get the fuck out and protect himself again. And he did that basically here with the also big chunk of his position. And you see minus 122, how this all got absorbed, probably by retail. This is how they use people, or liquidity. They take the liquidity up here and they use the liquidity to sell off here without moving price too far down. But yeah, because you asked about an example. An actual example, I think I executed a lot of trades in the MMA, and I shared a lot of also charts and my order flow analysis. But as said, I don't look at order flow that much anymore because on high time frame, it's kind of a little bit obvious to me. So I don't really use all of those programs anymore. I'm all about time saving by now. But I can go more into detail if I share a setup. I can think about also in my live streams, my public, if I talk about those setups, or the Major Monday, to include a little bit of order flow analysis every week. Or if you have a question, you obviously can always ask. Yeah, great. Great, it helps. Eye-opening, I like that phrase. But yeah, it was also to me, to be honest. I think as said, might be not important for everybody, but for me, it's always important to understand things on a deep level because this makes me able to improvise. If I only look at a block and say, wow, there's a block and I don't even know why I'm trading this block, it doesn't work for me like that. I want to understand why I'm trading this and why this level is there and what does it mean. And obviously it takes longer to really understand all of that then. But once there's a new situation, I can simply apply that and I can simply be flexible and adapt. Ob du richtig stehst. Yeah. Yeah, no problem. As said, I don't use it on stocks and anywhere. Like, I don't have data for that. I bought it on ExoChart, so you have actually a pretty wide range of stuff if you buy. Why is it not loading here? This is what I mean by ExoChart is sometimes. Yeah, I need to make it big. You can look at futures, at stocks, at ETFs, and I did all of that. I did not add a lot of value to my edge, and so I removed this again because I think it's $100 per month or something. Yeah, and if it doesn't add anything, I don't want to use it. And the nice thing is also what was here said. You can lose it by just looking at the candle chart. You don't need the exact numbers. The exact numbers are a confirmation pretty much. That's why I don't use it anymore on a daily basis. I sometimes look for this confirmation on Velo or pull up Exo real quick. Or if somebody has questions, as said today, I was talking about this already 2 hours. So that's why it was actually kind of convenient to open this up and have some examples. Because if I don't look at it, I also need some time to adjust and to find something I can talk about. But yeah, you don't, yeah, exactly. You don't need it. You can also do it without the numbers, but the numbers help to really get it and to really wrap your head around and you get to get the confirmation. And at some point, you look at the candlestick chart, and the candlestick chart is nothing else but this, right? All of those numbers combined are printed in here. And by looking at it for long enough and understanding the underlying mechanics, you can then apply it on a naked chart as well. How to make the indicator look like for the order flow, but can we cover it later whenever you want? It was on TradingView. Yeah, that's actually something we can talk about quick. So it's here. And this is now volume footprint. It will look different if you put it up for the first time. You go for point here. You go for settings. And then you have like a different settings for the symbols, and you can change the row size to an amount that makes sense to manual. That you So this is changing basically the cluster here, and you want to set it to an amount that is making sense. So this is too granular. You don't need to know what's going on every little cent here. You see, like every bar basically here is pretty much $1 or $2. This is too much. This is not helping. So if you change this, for example, to 200, then it looks better. So it's still a little bit too granular. So probably, why is automatic then 100 so different? I get more precise. Am I stupid? I don't use this a lot actually. But you set it to an amount which makes sense basically. So for example, this is already this is enough. It's a few dollars, and then the whole cluster makes sense. More important even is that you set it to type buy and sell, because delta is on one side, total is something different, it's just volume, and ladder is pretty much the same, but buy and sell gives you the bid and ask volume profile, the same thing I'm using on Exo here. So we looked at this and we said, okay, there's the point of control, the volume cluster is up here in this candle, so a lot of volume got traded here. And if you look, for example, at FVGs, I think we talked about this last week, you see this actually got skipped this area, so there's pretty much no volume. So price likes to come back to this area and fills this void. So these are the basic settings. Color, everything is all right. You can also, like, if you need that, put on the point of control to see where the most volume was traded. And that's pretty much it. Yeah, and display profile here to make it look like that. Yeah. If you really want to understand the underlying mechanics, probably, yeah, which makes sense for me personally to get EXO. As said, for me, it was the same. I saw it as investment in my tools. And especially now with the 3-point version, I can really recommend it. Before it was horrible to use. The new version is really great, but you need a modern Mac with a Mac processor. The Intel versions can't download this now, at least for now. I don't know if it will be there in the future, but for learning purposes, and if you're also interested in scalping, and I know, Andy, for example, you look at the 1 minute once the level hits and stuff like that, it can be very powerful to really wrap your head around all this, work with that. But you could also make it work with Velo, for example, if you want to save some money, as we've seen here. But you see, this is what I mean. Something like that. This kind of annoys me. But it's details pretty much. Yeah, so this to autoflow and Velo, I mean, it was a lot for me as well, believe me. But this is what I meant last time by looking at buyers and sellers fight. And if I then go even down to the 1 minute, you see like really how price action develops in real time. And this is, yeah, something completely else. If you have a real passion for trading, and if you want to really like put in hours and effort and stuff like that, you will probably find yourself at some point trading the 1 minute. And then you can look here how price action develops live. Maybe at some point we can do that. And then you look at the 1 minute candle and you see, okay, 4 million here. See, somebody's pushing price up aggressively right now. Obviously, never forget the higher time from context with this. 4.5. So somebody here with size is pushing price higher. And also, it's not really somebody working against them here right now. Okay, now he's taken the highs. So it's very likely that we reject from here, because this is how price moves, right? So he took some liquidity from here, as it seems. So let's see. If we don't reject, we will most likely go for those highs. Now shorts opening. You see, guys, open interest increases, negative delta. So shorts opening does not mean we need to go higher, but this means there is definitely a reason for price to take this high, because this guy getting short here, he has to stop somewhere. Maybe he plays it super tight. Maybe it's also the guy with price control, right? So we don't know that, but just looking at the numbers, we can just assume. But he is taking those highs, and like I said, we reject a little bit. Maybe we fill this FVG. Maybe we go for this block behind the FVG here. And there's liquidity now forming above, and it's actually not that, but it's longs closing now. Sorry, guys. It was green for a second. And you see, then it obviously also gets a little bit confusing if you're still fresh as trader. So with now lots of we have some shorts opening here. You see the wick, and we have some longs closing. But overall, we had risk getting removed from the market. So somebody sold after this move. And this is what I did for hours. And yeah, I'm not saying, I would not recommend doing this for too long. And I would also not recommend trading this if you don't know how and lack emotional discipline and stuff like that, especially not on size. I mean, playing around, obviously, why not? But this can help a lot to really understand why is price doing what it does. So this what happens here, you could also imagine this is higher time frame price action. We take this high, this is a daily candle. We take this high, then we reject a little bit because we have taken the liquidity here. This does not mean we nuke immediately now down to 90K, same as on the daily, but we reject a little bit to create maybe more liquidity, to de-risk a little bit here. And now let's see if we target those highs here. Yeah, it's a great hobby. It's a great hobby. But you won't find a lot of friends who want to watch that with you. No, I did not trade the 12-hour breaker block on ETH. I shared the setup how I would trade it, but I did not. I'm not so interested in levels below daily. As said, for me, it's about like time efficiency mainly, spending my time as efficient and as fulfilling as I can. And the trading 12-hour levels is usually not included in that, at least not right now. But I think I shared the setup how I would trade it, and that I usually approach it wide, and then once price action comes into my level, I would probably tighten. As far as I seen, this was a big liquidation grab, so it was hard to pull any trend lines or anything. Yeah, now I also need to change the cluster to make it make sense. So now we should look at 100K is a little bit too less. Oh no, my Mac is almost exploding again. Also, EXO is very demanding when it comes to processing power. So recording my screen, running a live call, and looking at EXO charts is a little bit much for a laptop. And before with the old version, I don't even know if I could have done this all at once, because the old version was horrible programmed and probably took 80% of all of my computing power. Yeah, and this is especially fun when there is really volatility. So if you have 5 to 10% moves a day, it's most exciting to look at order flow if price is very stable. Don't even know what's going on. It's not that stable actually. It's not even percent on BTC. So on highly volatile days, so also later, like FOMC could be very interesting to look, but this is going to be a little bit late for me. Yeah, and to your question about the 12-hour ETH, in this case, the level was just like the level. But usually you should cover the FVG. Usually your setup should look like this. And then you could think about tightening. I would probably go for this if I would want to tighten. And then execution tactics on a move like this is why like my whole approach, and I do a lot of things I came up with myself, and crypto is not the best environment to do that. Probably even need to go down to the 1 minute, and not even here you could really properly execute the trend line because the trend line is already vertical. I mean, you could force it, but yeah. probably my execution approach in this case not the best approach. But there is a reason why I don't trade those levels, even though it would have been worked amazingly. But it is what it is. Many setups every day. But in this case, it would have been enough to cover only the level. In most cases, it's wise to cover the whole FVG and use some kind of 5-minute breaker block, some kind of execution tactic. Then this is at least how I do it. Where is a 5-minute breaker block? This one? I know what you mean. Could have helped. So sometimes this makes sense to execute a higher time frame level than within here a breaker block within the within the lower time frame. Could have also failed. So in this case it worked. So don't expect it always to work. But in this case, yeah, sure, why not? Could have helped. Nice execution tactic. Increases your probabilities to not buy into a falling knife and getting smashed, I guess. And also close above this local high here, full body, pull back. Yeah, why not? When I played those, I often still kept my stop loss below here. But if you want to play it aggressive, you can just cover the FVG or the demand here, whatever you feel comfortable with. Don't be too RR greedy. It's usually not that helpful. Fun of you who will watch this in the group. Yeah, we can usually. So if there is an aggressive day, we have like a session, we can simply watch order flow and do analysis on order flow. And now we reject. We have some more shorts opening. You see, wick at the lows, green overall, negative. So more liquidity forming in theory. And I'll usually, so if the problem is FOMC is in like 1.5 hours and I'm already tired, so I won't make it that far. And FOMC is usually just a lot of fuckery. But it can be interesting to watch it from an order flow perspective, depending on what happens. Sometimes it's also nothing burger, right? Sometimes nothing really happens only 2 days after. But if it's crazy volatile, it can be fun to watch in order flow. But also what I'm showing here on the 1 minute, don't try this at home if you're not emotionally in control of your behavior, because this will make you, many people get a false impression of certainty or security by having suddenly the order flow tools at hand. It's harder than it looks, and it's also still probabilities, and you should still manage your risk, control your emotions, everything properly. Very important. And if it just drains you, confuses you, leads to worse outcomes and to losses, don't look at the 1 minute. It's not necessary. Lots of questions regarding execution can be covered in the next session. I can provide an example of a trade that did not work out. My execution was lacking. Yeah, sure. Perfect. We do that next time. And if you're willing to come up on stage and show it, even better. And then we can talk about it. Lots to process this evening, tomorrow morning. Yeah, order flow is a broad, complex topic, and you will have many different situations. So the ones I've shown you, you won't always see something like that. It's many more possible scenarios, and it will always look a bit different. But it's all about consistency, wrapping your head around those basic concepts. And once you got the basic concepts, buying, selling, delta, open interest, all those things, you can apply it on every single situation. Doesn't really matter. Same with level invalidations and B-wall 2 next session. Oh yeah, I forgot about B-wall. True. It's on the list. Remind me if I should forget it. But B-wall execution, maybe I can come up with something myself, but then Victoria can share this. B-wall, you talk about B-wall or B-wall 24 specifically? Or we can also cover both. We have a lot of time per session anyway. So now we fill this FUG, come back for demand. So probably after we done this down move here, we'll probably bounce a little bit, go for the supply again. This will usually not fall through here like nothing, especially after making a high here, right? So took this high, probably bouncing here. Then the question is, can we take this out or not? Time flies by so fast. Yeah, same for me. Explaining this stuff, and I mean, I'm also, for me, it's, to be honest, it's I have to concentrate a lot to really like bring this all out. And so I'm really in flow. So for me, it's also like bam, time's over. But I enjoy it. But longer than that, probably not. I couldn't take, to be honest. So after 1.5 hours of me explaining only, I'm cooked. I'm really done. Imagine if you didn't enjoy it. I would probably not be a trader if I didn't enjoy it, and I would also not offer like the white belt. um, and yeah, I mean, I'm not as passionate as, for example, a year ago, but obviously my knowledge is way better than a year ago. But I was completely crazy about trading, like completely bananas, with this stuff especially. And now it flows simply. So after putting in hours and hours and hours and trying to wrap my head around all of this stuff, it flows, and then it's fun. If it flows, it's fun. Yeah, here's the little bounce. Yeah, and we could do this now all day long. So somebody is really aggressive here. Yeah. So if there are no questions anymore, we're gonna wrap it up here. Because as said, we could now look for hours here into this chart. Okay, amazing guys. Thanks as well. My pleasure as always. Enjoy your week, guys. We talk on Saturday, B-ball execution, and whatever you're gonna or wanna talk about. Okay, have a great week. Bye bye.